One of my favorite trading systems is tick count trend, and if you go over to my website you can see Tradestation, NinjaTrader, and MultiCharts all have tick count trend, and we're looking at it in MultiCharts today, and I'm importing Tradestation data. I'm using my research platform, which has delayed data. As if you know, in Tradestation you cannot mix symbols of different delays, so if you have delayed data in Tradestation you can't run the performance for the E-mini Russell. And so if I want to backtest the E-mini Russell for this strategy, you see the delay here. There's prices are updated here for the E-mini Russell, and then they're all the way over here for the tick. So it's a little bit further ahead, but you can mix symbols of different delays for backtesting, not for trading. And so you can see today short, short, and then a stop loss and short again. So sometimes that happens as far as these counter trend rallies stopping us out on a trade and then coming back down. So on this strategy, we have a $400 profit target, a $400 stop loss, and 6 trades a day. So we hit $400, $400, lost $400, and then we're in a short trade. So slightly profitable. So up a little bit over $400 on the day so far on that strategy from a hypothetical perspective. And if you take a look at the trades back to 2005, total trade analysis shows that this strategy makes $45 average trade profit before slippage and commission. And so with E-mini Russell, what we get on these trades when we're getting in on limit orders, it can be a wiggly, what I call a wiggly market, kind of like crude oil and gold. It's not as much market depth as the E-mini S&P, so you can get slippage in your favor and slippage against you. And so you can take home maybe half of that after slippage and commission, or a little bit less, so it's still net profitable. And I like to run the results on raw performance data to see what the advantage is. It trades a lot, so you're going to have smaller average trade profit, and one of the things we like to do is diversify our approach with high volume strategies and low volume strategies instead of just trading all low frequency strategies. This is a little bit higher frequency, and it's a higher frequency for us, but in the general scheme of things, going back to 2005, that's not really a lot of trades for one strategy. There's there's some high frequency traders that take more trades than this in a day. So it's still a low frequency strategy in the big perspective, but it still trades frequently for a low frequency trader. And if we look at the equity curve with the drawdown, you get these results here. You see the drawdown is around $4,000 max drawdown. Nice equity curve. It's going to be a lot choppier with the slippage and commission, but it will be net profitable because you're not going to average $45 slippage and commission. So it's a high volume strategy, and just like any business, some strategies represent higher profit margin approaches if they're low frequency, and other strategies represent lower profit margin high volume strategies. And this is one of those with lower profit margin, higher volume, that you can take a look at and trade. And again, that's the update for the tick count trend, and it's in MultiCharts, and I wanted to share that with you. Also really balanced between long and short trades, 66,000 versus 64,000, so notice that. So that is how you could trade the E-mini Russell using tick count trend in MultiCharts, and it also works on Tradestation and NinjaTrader. Let me know if you have any questions on that strategy.